Oh yeah, Doctor Elder is really good.
Yeah, and I'm going through his technical portion, and he he was talking about I forgot what let me see what it was the way to use the EMAs, you know,
Hmm.
but you know the fact that you got to use more than just those, of course, we know that. But I'm just saying he had. Then I went and see. I had, you know, he uses the RSI too, and so I was, you know, I had one time I had an RSI indicator made up where it's just two RSIs on top of each other, and you can adjust them how you want. And he brought up a good point that if you're using two RSIs, you need to have them, whatever it is, you need to have your fast line one half of whatever your long line is. And so, in other words, if you're using 20 for your long, you want to have the short at 10. And so I switched mine over, and I asked AI what would be the best ones for scalping, and it said I think it was 5 and 10. And so let me see what I did put on there, but it really did make a difference. Okay, it was 5 and 13. That's what AI said. Five and
Okay.
13, and then
But
on the it was the let's see, was it stochastic? Yeah, and anyway, it worked real well at that. It was a good you know, it gave a good signal with in conjunction with the MACD and the Stoke. So all three of them together in
very
concert.
cool.
Yeah,
Hey,
yeah,
Steve, we're gonna start by
yeah.
opening in
I'm sorry,
prayer.
Doc.
No worries. Heavenly Father, we just thank you for this day. We thank you for this is the day that the Lord has made. We will rejoice and be glad in it. We just thank you for opening our eyes of our understanding that we may look at the charts with wisdom and understanding to find winning trades, and that you give us the great victory as the wealth of the wicked is laid up for the righteous in the name of Jesus Christ. Bless everyone under the sound of my voice. Bless everyone here. And in Jesus' name we pray. Amen. Okay, ring the bell. All right,
Amen
all
to
right, all
that.
right. Welcome, ladies and gentlemen, to the Samurai Sword $50,000 challenge. My name is Dr. Greg McLeod, and as always, it's great to be with you here on this fabulous Thursday here in during the London market. The market is open. We're actually going to go to. I'm going to share my screen. Make sure, in fact, we did a sound check, video check. Does give me a check, let me know the number one if you can hear me, and then I'm going to share my screen, make sure I can share screen number two. Okay, and share some sound there, and we can go ahead and take a look at our. We're going to start with our Samurai, uh, the or the, the scanner there, and I got an amen from Lisa. I got a number one from Winan and Nanette. Nice to see you as well. Charles, nice to see you. Looking handsome and dapper as usual. And of course, Steve. Who else we got here in the room? Okay, great. I think we got everybody. Okay. And other people there probably come on later on. But this is the Samurai opening range breakout for London. London session is active, and we're actually going to be looking for the Samurai Sword, the opening range breakouts. We want to trade the A and B. Oh, we got a bunch of A's. Look at that. A's are rare. We don't get them all the time. I don't think we got one last night or last yesterday at all. And so these are the ones that the now for those of you who are on the if monthly, you'll get the 7 days or so, month to month copy image. Let me go ahead and give you the link to that so you can look at these. These are the potential ones that we want to look at as far as breakouts. We'll dive into each one. We see yen pairs, dollar index. Actually, I want to actually look at the forex. And the forex, we have Kiwi yen, dollar yen, and 5 minute breakout down. The dollar yen is says it's breaking down. In the orb scanner, if we click closely, we can see that tells us the direction is short. Entry is 59.33. The stop loss is a 1R at 59.38, or about 5 pips. First target, 59.28. Next target, 59.23. And the 4R target will take us to 59.13. And the lot size and risk is all dependent on what size account you're looking at. If you're trading with a $100 account or a $50 account, it's all going to do. You have to adjust the for this, right? All right, so let's go ahead. We got dollar yen. Looks like the yen pairs are all looking good. Well, dollar yen was there, and so let's go ahead and go to the yen pairs, and I'm going to go to dollar yen and looking at trading view. And I'm actually going to change this. Okay, we had made some adjustments in the input time. Oh, we want how about losing London, right? All right, so London, and I'm actually going to okay, I'm going to either a standard time of 2:30 and 3 o'clock. All right, and it looks like we have a south side break from the box. We're retesting. I don't want to short on a green candle, but I would like to see a break below the low of this candle. The samurai sword is this formation or this range here. Top of the range is 59.38. Bottom of the range here is 59.33. Price did break very sharply, but the moving averages are kind of twisted. We have a 20-period moving average and a 50-period moving average. 20 over 50 is usually a bullish, so this was seemed like it was a bullish move at the beginning, and then moved sideways, and we broke down, but we have not. We want to see some follow through there. So we do have our candle breaks. We have a retrace, which gives us a chance to maybe short it at a higher range, but this is what I would look at. Okay, so I've got a red candle there, right? And I'm just going to go ahead and click sell because we are below the sword. This is our sword, our samurai sword, and we're below it. And we've got several candles below it. Now I'm going to move my stop loss. My stop loss should be maybe a pip or two above the edge of the sword. This is our sword. This is the edge. We place our stop on the other side. Really simple. People ask, where do I place my stop? Where do I place my stop? You place your stop on the other side of the range, right? You place your stop on the other side of the range. That means we're risking $3.64 on this trade. That's our risk. And so we want to look for 1.5 or 2 times the risk. Sometimes we can, try to go for 3. But I think the higher probability is when we go for 1.5. But sometimes it will go, I mean, I was taking pound Aussie short yesterday, and I'll show you an example for that. Where what is possible? It can happen where we had an opening range breakout yesterday during 7:30, 9 o'clock, right? So we broke south after the Tokyo Open. Price dropped. My entry was here where this arrow is. And then what I did is I moved my stop from on top and I trailed my stop down to lock in profit. So if price did in fact rise and hit this level, I locked in $38.36 in profit, right? So I was going for, so my risk was rather small compared to the amount of gain that I made, but it's a very mechanical process. The range is established by the first 30 minutes of price action. That's the red area. That is the area that's created the ORH, or the opening range high. The ORL is the opening range low. And we look for the distance of that as profit. And sometimes we might get 1-to-1, we might get 2-to-1, we might get 3 or 4-to-1, based on, this is what the market will give us. And the whole goal is to move down our spreadsheet. Right? Any questions on this? And I'll give you this. I'll give you this sample trade that was done, and you can review that. Right. And the whole idea is to go down you might be able to go through in one trade. You might be able to go through multiple trades. Right. And so this is our compounding spreadsheet. If you're starting with $50 and you're trading 0.5, made 25 pips, you're able to move this. Now, it might take one trade, two trades, three trades to hit this, but the whole goal is you don't increase your position size until you've achieved this balance target. And if you keep doing that, faithful with little, compounding over time, you will, you might move. And if you move back or if you lose money, well, then you don't keep your position size. You reduce your position size and go backwards, right? You might have to go backwards a couple of steps, right, in order to move forward. But the key is you want to follow the plan as best as you can. And so I'll give you that link as well. So you can print that out and have that on your computer. Let's go back to our chart. And there we go. We're short the dollar yen right there. I think I'm probably gonna pop that in there. Can I? Right. So it's up $2.07. Enter that in my MT4 account. And so that's our trade. I mean, the way it's moving, we can even move our stop and then we lock in like 50 cents or $1. We have a risk-free trade, right? We have a risk-free trade. So if it, the whole premise is that once price breaks from this area, the operators will continue to move price down, right? So if you go to a 1-hour chart, we would expect price to, maybe retrace. Typical retracement target was a 38% retracement. So we could, look for, we could even, try to get more, try to get close to that 38% retracement. Right. So from 0 to here, and then a third of the way down, that's $22.77 on a 10K lot. Like, again, depending on what size your balance is, you're going to adjust that. And then we're going to go back to our time frame. I'm going to go back to it. I'm going to go back to the 2-minute time frame and maybe reset the chart. Okay. So price is challenging this old low back here, 59.28. It bounced. Let's see if it will break on through. This could be a double bottom here, 2-minute chart. Let's see if it can get past that. And this might be a little soon to move your stop into profit. 69 cents is not going to do a lot, but you can move maybe with half the range and give it a little bit of room to breathe. So again, we got short at 159 spot 32, stop loss at 159.36, and we have a take profit. Our big ultimate take profit down here is a 38% retracement. We can even maybe be more conservative and go for the 59.15. Let me turn off some of these. We got Aussie CAD doing something. I'm going to take a quick look there. Oh, breakout there, maybe. Yeah. Where is our? Well, so here, sometimes you get this going on where price will break out with wicks There's no closed candle, so there's no trade here, right? We don't get on the wicks. We want some type of a body close a little bit over that, you know. And there's a lot of things going wrong with, I mean, the moving averages are in the right order, 20 above the 50, great. Stochastics is kind of hanging around, okay. And our histogram is like turning down. So we want that kind of that hooking pattern that takes us out of the box. So I'm going to actually delete that alert, tired of that thing beeping. EuroCAD, let's take a look at EuroCAD. And EuroCAD actually broke out of the box. Let me go back to 5 minute. Yeah. We did have a break and a close. Out of the box, the moving averages are stacked on top of each other. Got a lot of wicks though. But this would be a trade that we could possibly get behind. You know, it's within the range. It hasn't gone too far away. It's come back. It tested the box and bounced. So we got long. We got long at 161.84. Again, very mechanical. Where I place my stop on the other side of the samurai sword or the breakout, right there, right? So our stop is at one spot 6179. So about 3 stop. Let's say we go for like $8. Take profit maybe. So like maybe $9. Let's see, right? So let's go for 1.5. Take profit. I mean, all day long, that's going to be a money trade. Why? We have an uptrend. We broke out in the direction of the box, right? And you know, and I had an alert. I'm going to go ahead and delete that alert, right? So our risk is small relative to our gain. We do a risk to reward. Really, this is what it looks like. Applying simple math that if you hit these, even at 50% win rate, if you've got the a 2.42 or 3-to-1 or 4-to-1 risk to reward ratio, you're going to be profitable over time, right? And once you set it, you don't have to, especially for London session. The whole idea of the strategy is that to go the average daily range of a currency pair is roughly 100 pips, right? That's the average. How far on average, 14-day average, a pair will move 100 pips. We're trying to capture 25% of that. That's the goal, right? You might catch it on one big swing. You might catch it in a couple of swings, but that's what we normally aim for. Some of you are aiming for smaller targets or whatever not. But the way the strategy is established for you to get 25% of that 100 pips, which is 25 pips. And if you can get 25 pips, whether in one trade or a combination of trades, you should be able to move down the spreadsheet in a very efficient manner, right? So, if we're capturing 25 pips, well, then, we should be able to we could probably catch even more of this by using the trailing stop, maybe taking off 1/3 or taking off 2/3, letting 1/3 run, moving your stop into profit, and then just following it up, and then maybe looking at another currency pair, right? So it's very, very mechanical the way we're looking at the trades. Let's look at dollar CAD. Dollar CAD was really, really nice yesterday. I'll show you what the ideal it goes settings, and we're gonna look at historical, right? And if we look at all right. Oh, let's look at was Tokyo session, right? Tokyo 5 minute. And hello. There it is. Yeah. Okay. So you see how this one, we rallied, we got long on a break, stopped below the low, did, it itched a little bit. We maybe we're stopped out, but if we were stopped out, we would re-enter, and then it just moved up, a tremendous amount of pips. Right. We moved from the break to here, and that's 10 pips. 10 pips is not bad, especially once you move it into profit break. You break even, stop, you find another trade, you get 2 or 3 of these going, then you'll be able to move down the spreadsheet. Okay. Any questions on that? If you have any questions, or if you see something, say something. If you see a chart or something worth looking at, let us know. Don't keep all the pips to yourself. We get back here to London. And
Wynand here. Can I ask a quick question, please?
Yes, of course. Hey, Wynand, how you doing?
Hey, team. So what I sometimes see is that there's a breakout in a particular direction, and then it'll go back through the sword into a different direction. If everything then sort of shifts, do you take that as well, or is it just too high risk? I've just seen, unfortunately, I don't have a good example, but sometimes you'll have a breakout, and it comes down and it just slams all the way through the sword into the other direction. Admittedly, this would be like a Bitcoin or a gold, something quite volatile in comparison. Do you take it once and that's it, or do you
no? Sometimes that's why I like having a higher time frame on the other. Having that 30-minute, like a 30-minute chart that kind of like gives me a view of what this market is going. Let's see. Let's make this GBP USD. I think that one had a whipsaw. Remove all the drawings right there, and okay. So this is the 30-minute chart, and then I want to add. Let me add something. Open save 10-20. There's those 2 moving averages you're talking about, Steve. So here's a 10-20. So if you're in this on the higher time frame, a breakout is not going to be very. This is if this is a 5-minute breakout and it comes back down, you can see that this is going to be a problem, right? In fact, let's put the opening range breakout on the 30, right? I'm going to change it to the 30, and then change it to. It's not going to show. I want to show the historical settings. No. Okay, let me go to the 5. Get rid of that, and change it to settings. I'm going to change it to 3 o'clock, and then I'm going to change this to historical, right? And now you can see, and then let's go to 30, right? So you can see, okay, that in that chop, I don't know, the internet winked out. Am I still there? Am I sharing my chart? No.
No, it's just you.
Okay.
You're back?
Yeah, I'm back. Yeah. The internet just winked out. It's really hot here in Las Vegas, and sometimes the power will wink out because of all the air conditioning. So I guess it was like a minor little blackout, just enough to knock my internet out. Okay, so here's a 30-minute chart, and these are our opening range breakouts for London. And you see that this one was a clean one. So if you took this one on a 5-minute, this is a 30-minute chart though, okay? So you can see that was a clean one, no problem, right? But look at this one. Breakout. And it went from 50 to 75, right? So, I mean, that's a 25 pip move. But then after that, what happened? It jumped back through, jumped back up, right? Or this one here. Here's one that broke south at 5:30, broke from 37 to 21. So that's 16 pips, a 16 pip drop, but then it reversed and went back during New York. It flipped back through it, right? So sometimes you will see that, but it'll go big one expansion, then it goes chop, and then what you get another expansion, and then a reversal, then a big one, really easy, right? Easy trade. We went short, it went up a little bit, might have stopped you out there, but then I would re-enter, right? Why? Because you want to look at the bias of the moving averages. It's like, I need to do my bias again. I'm following Steve's colors, but I need to follow my colors because I'm really color sensitive. I have to have that red and that green. I've just been doing it for years. So what red moving average is a longer term moving average. When the longer term is above the shorter moving average, that's bearish. And so we have a bearish breakout. The rally was false because it's going against the moving averages. And then, so you're going to lose some, you might going to lose some of these, right? But the key is try to minimize the losses by like looking at what's going on with MACD. Am I getting angle and separation below zero line? Am I getting a clear bearish sell-off with lots of angle and separation between the moving averages? Also, am I using the orb scanner? I don't think you had access to the orb scanner at the time. I'm not sure.
No, I didn't. You're right.
Yeah, right. So, and then looking for I can sort these by grade. I click grade and sort. These are the D's. I probably don't want to try any of those. And you can try. Sometimes they work out. I mean, this one's been going for 7 minutes, but I like going for the A ones, right? And it's been sustained, and there's this pound. So I'll use the A and B ones. They're very good. And that way, and the reason why it says if you hover over the A, it'll tell you estimate our runway, how many multiples of initial risk. No, that's not it right there. Yeah. Clean chop, clean range, no chop, coiled spring. The range that's covered is only 6% of the total ATR. So I told like the ATR is usually 100. This has only moved 6%, which means there's 94% left, right? A clean boundary, sustained 5-minute close outside the range. Target 3.96 R achievable. London session is best historical edge, aligned with dollar, US dollar, both breaking down with an 8.4 R runway available. So that's telling you, a lot, right? It's lining up with the dollar index. And so, I mean, that's the trade that we're in. We click that, and it's showing where the 4R is 59.14. So I use this as your filter and choose the A and B trades. And those are usually, let me get rid of all these. I've been saying these alarms, and they should have like some type of expiration on them, because they just then we were trying the awesome oscillator, and those have been going off. But yeah, this one. Let me just close all these out. Like, see, or they'll mess up the recording of all the beeps, and they're from the previous session anyway. I've got a couple more active ones left. Sorry about this. Sorry. Does that answer your question, Winnan? Ooh, I did.
Yeah, absolutely. No, spot on. Thanks, Doc.
You're welcome. Okay. And no more. Okay. Good. No, we should not be disturbed anymore. Okay. All right. Okay. Okay. We're still hanging around there. Lots of wicks. Okay. So this is on the crock pot. We set the 5 minute. 5 minute. There we go. Whoa. So it's making a run back up. Right. This is for London. And where is there is. And then let me just redo this. Okay, settings. No. Okay. I want to check out gold. Gold is pretty volatile. It can be very fast. But sometimes if it's a clean, orderly move, then it's something that we want to. Okay, so this is his came back, retest the box. Let's see if it retests the box again and makes another drop. Back email lower low. But that's why I kind of like maybe like leaving the stop on the other side of the blade, right? And just give it some room. Give it some room. Back it up, give it some room. And if this thing breaks and keeps going, I'll risk 351 to figure out I should get long or not, right? Let me change these colors and make this a default settings. Should have did my homework. Okay, that should be green. Just me. You guys can make it any color you want, but just for my sanity, red is down, green is up. That's how we've been doing it. And then now I'm going to save this as a template. Go here, go save template, go London. LO. London SORB. Okay. And I'm going to then save. Okay. Yes. Okay. And then 5 minutes. Okay. So leave it there. Okay. Oh, okay. Let's go ahead and I'm going to check gold, XAU USD. And man, what a drop gold is. There we go. There we go. Red. Okay, see the order. Red over green. Check. You go through your checklist. You have my moving averages bearish. And we exited the box bearish. And I would watch this because this could be divergence where this is a fake move, right? So I will watch it. I like to see it break the low 45.93 before re-entering. But this has been going down for a long time. And we can actually use Fibonacci expansions. I mean, we may be facing some type of an exhaustion where we're making a new low in price. We're not making a new low in the indicator. This may turn around and go back up. So we might want to, this wouldn't be a good candidate. Bitcoin looks interesting. Moving averages are coiled kind of tight. If we get a break above, say, 78,837, we're interested in that. What were some of the other ones we were looking at? Nope, not that. Not that. Not that. Oh, the Dixie was an A going. This is cool. This was an A going down. It should be the euro should be heading up. We can use a little bit of correlation knowledge. But the euro is not acting good either. Pound, no, not good either. Who's our A? Dollar yen. All the yen. Okay, let's look at Aussie Kiwi. It's up 20 minutes. Let's take a look at that. And it looks like it's taken off. Let's take a look at Aussie Kiwi. All right. Ooh, look at that. That's pretty. That's what you want to see. And if we've gotten a little earlier, like our entry was here, prices compressing, Got moving averages, the green one's above the red one, the 20 is above the 50. We broke above the channel. Stochastics is above 80. MACD maybe looking a little, I mean, it's making higher highs here, making lower highs here. If price came down or I wait for a green candle, I don't want to enter on red candles. I want to see a change from red to green. And the top of the range is at 1079, and this is 081. So it's only 2 pips above the range. But this is a strong candidate. In fact, it's an A, right? And it's top of the map too, up 0.17%, along with Aussie Swiss, right? Now, this one might even drop to a 15-second chart and see where this is going. Oh, I got a green candle, and I might get long right now, right? Still have my stop on the other side. It might cost me a little bit more. Oh, wow, $5.18 to figure out if this is going to maybe go up to like $12, a $12 move. Is take the risk, multiply it times 2 and take half, and that puts us around 12, right? I'm not gonna get real, right? And there's other things you can use, Fibonacci expansion targets too. You can do a fib from the low of the box to the top to the pullback, and you can get expansion targets. 224% expansion target happens to be 121.03. Okay, so we can do that. So that's and it's moving in the money, right? Let's go back to, what was the one we looked at? That was Aussie Kiwi, Aussie Swiss. Aussie Swiss didn't. Right? It's stuck in the box. Dollar Swiss. See this one? Super messy. Green over red, it dies, and it crosses. Now it's crossing back again. No. You want to make it this easy. It should be really easy. Like this one was like, okay. This was super, super easy. I mean, it broke, it rallied. It's too late. We missed it. We missed the train. It's over. But 96, or what was that? 596 to 611. So 15. It was a 15 pip move. You see the head and shoulders, an A, B, C, and maybe this starts running for another leg up. But now you're not samurai sorting this. You're pip and running this, right? You're just saying this is a bullish trend and I'm scalping it. But you don't know if this thing could collapse and come back down. But if you're in here, well, at least you've got the safety of the range, right? So this was a great one to get into. Let's go through dollar CAD. Nothing there yet. Euro Swiss. Okay, I'm just going to go through. Oh, wow. Look at Euro Swiss. Where's the rest of it? Okay. Well, this one, not 390, 391. It's only moved a pip. What have we got? The spread is wide. That's what this thing is. Let me look at this. Stop loss below low. So the stop loss will be about $6.58. Might give another maybe 670, get a little bit extra. And then 6 and half of that, 335, like 9. So like 935, maybe 950. Try to pick up 950 on that. So I'm just doing this if you're starting with a $50 account or $75 account, right? Anybody said, I'm not really excited about this, but the numbers will add up. But if you are using like standard lots, well, then it's going to be different, right? And I'll show you what it looks like. It doesn't matter. It's just moving the zeros around. But as my good friend Steve has learned, you get a little bit more motivated looking at the bigger numbers. And that's why I used to trade with very large numbers. Keep you guys interested. Right. Because it's in the end, it's just dollar Swiss is an A. How? Well, what happened somewhere? Yeah, it stopped out somewhere.
Yeah, on the USD yen.
Oh, dollar
I
yen.
think,
Oh,
yeah,
okay. Let's take. Oh, okay. Well, let's take a look.
I think it's on its way up.
Where? Oh, yeah. It came back inside. So back inside. It's back inside the channel with divergence. So my stop is right there. It's some trigger, right? Bounce. Oh, EuroCAD. EuroCAD. That's the one that went nutty Casey. Oh, well, look at that. Well, if that's what you want to do, well, well, sell. Okay. Stop loss. Wow, that's a big. Oh, yeah, that's what I'm using 100K lot. So it'd be like $3.44 if you're using a 10K lot. But this baby wants to drop. Okay. All right. 334, 17, 50 something, right? 68, 84. Okay, let's go. Let's go. Okay. I'm saying, oh, look, nice little breakout above the high. What happened here, right? 5-minute chart. Yeah, it's really hard. Dollar CAD will fake you out because the CAD is just a weak currency. We got the trade. We got the whole tariff thing going on right now. Then that's I love that just changed mine. Yeah, it just it was like, yeah, what's up? Yeah, nah, it's all right. And the thing about it is that we're not the only ones that got stopped out here, right? Came back down. We risked $3.60, and the thing about it is, the thing about it that once it breaks and gets all these people out, that you're gonna have maybe more committed people to the short side. And then they'll probably maybe accelerate and start moving super fast. So what's going on with this Euro Kiwi? Euro Kiwi going up? No, Euro Swiss. Let's go back. I'm like not trying to guess here. I'm just trying to stick what's going in here.
Aussie New Zealand has been going up. It's been pretty steady.
Aussie New Zealand, and yep, there it goes. Keep going. Yeah, put a 100K lot on that one, right? That means the Kiwi yen. Oh, that missed that train, right? How fast that moved, right? Oh, 5-minute chart. Let's get back there. Well, it crossed the bearish cross happened inside the box, and she just dropped. Okay. So that I guess that was an A, right? Oh, that was an A. You think? So what's the target? 94.51 max target for R, 4 times risk, 2 times risk, 94.63, 94.51. That's if you got in that trade. 61, about 10 pips left in it. So what you can do is draw a trend line on it, look for a break. When it breaks south, get short. That's the one way of doing that. And then this is where you put your alarm if you want to watch it. It's about the EuroCAD.
I got in that one with you, and it's going down.
EuroCAD.
Yeah.
Okay, cool.
It's in the green.
Yeah. Now this is tricky because again, now here the moving averages don't agree, but we have a close below both of them, right? Like for instance, here's a break, but there's that value that we have a downward break, but it didn't go below didn't close below the bigger moving average. So that represents value. You could have bought this, you could have bought that, you could have bought these dips. Even here, it didn't close below, and this one slightly did, but you could use these wicks. This could be a trading system where you have these, every time you get a pullback to the boundary, then hey, like it's like Bollinger Bands. You buy the bounce, buy the bounce, buy the bounce.
That's what Elder says. He says the values between the EMAs.
Yes.
You get the separation.
Well, you tell I read the book, huh?
It's a great book. I'm really enjoying it. But he says when it pulls back to your long line, like we're seeing right there, that's a buy. On an uptrend.
Right. But see, this is basically walking upstairs, and now his foot goes through the stairs, and then he falls through to the basement.
Yeah.
I did that zip lining in La Cañada in Mexico, and between the zip lines they have these rope bridges with spaces in between.
Yeah.
And I'm walking, my foot goes through. It's like there goes Greg. He's got he's hanging.
Sounds like boot camp.
Right. Were you in the military?
No, I wasn't.
Yeah,
I avoided Vietnam.
I
was
were you a conscientious objector?
No, my girlfriend got pregnant and we got married, and that kept me out at that time. But so many guys started doing that, they ended that deferment 3 months after I got it.
You get 4F flat. You get flat feet.
Yeah, and then my brother's number never came up. He had a high number, in the lottery.
Mm-hmm.
So he didn't get called up to go. Thank goodness it was just a hamburger grinder.
Yeah, that wasn't a good war. No war's good.
No.
Pound CAD. I don't know why with that one. Let's just stick with the B's. Here is this was forming. Pound Swiss is forming. Euro Swiss is forming. Aussie Swiss is in the range. Pound Kiwi is up. I don't see it on here. Oh, there it is. Oh, come on now. Look at this. It's a rocket. Dang. Bro. that's a B, right? That's like an A plus, right? It's screeching, right?
Yeah, it was in on my 1 minute chart. It was in a bit of consolidation, but it's breaking up out of that. It looks like the
Yeah, I mean,
pound New Zealand.
yeah, look at that. Yeah. And the little triangle it gives you is, you can probably pay attention as a buy signal too. And look at this. I mean, there's a lot of chop and these really jerky breakouts.
And
All
you
right,
know the Aussie New Zealand's still going up.
okay, let's switch that channel. Now I'm going through a lot of different ones just to give you guys a variety. But you don't have to trade all of them, right? Basically, it's best to concentrate or focus in on like one. And if you got your stop and limit set, uh, you're free to leave. Go to sleep or go about your business. You should be able to let this run. Uh, and we can find the average daily range of this currency pair by going to go to the daily, go to an indicator called the average true range, and then you can see, what the average range is. And here you look at the numbers, it's 0.00684. Ignore the last number. So the average range is 68 pips. So this is the average daily range over 14 days. So over the past 14 days, the average movement from 5 p.m. Eastern time has been 68. So if you get half or a third of that, or 25% of that, be pretty good, right? We're going for 12. We go back to a 5-minute chart.
Doc, would that be a good way to do a longer term trade? In other words, take the average true range if you knew it was going to be 65 pips on average a day, and you start your trade after 5 p.m. when the day starts, Forex day. Um, could you expect to get like 25-30% of that 65 from that start?
Yeah, because usually, let's say, well, actually, we started here, right? This is let's say we started from. I'll put a price on that. That is 120. That 60. 060, 60, 060, right? And we're at 087. So that's 20. We've gone 27 pips so far. So there's about 40 something pips left in this.
Okay.
Right? Typically. Now we've seen where the currency can overshoot its daily range, and it'll do like 150 in a day. It'll do this. But then for the rest of the week, it'll be like crap. It'll just moving sideways because the average daily range is like it's like being on a marathon. You run the marathon, you're just not going to run another marathon the next day because price goes from high volatility to low volatility. So if you get this big trend in Aussie Kiwi today, and you're so in love with Aussie Kiwi, you want to name your kid Aussie Kiwi, you made so much money, you name your dog Aussie Kiwi, you want to make an Aussie Kiwi t-shirt. I love Aussie Kiwi, right? But then the next day it's crap because it's wave 3, after 3 comes 4 consolidation, right? Or if this is a 1 wave, it may be a choppy 2. All ranges are choppy consolidations after a big run, right? After 3, there's 4. After 2, there's 3. So, what I would do is I would trade, get these big runs in dollar yen and want to name my kid Yenny. And then the next day it just sucked, and then I wound up losing all the money I made the previous day because people, we find something we like, we tend to do it again. It's like, hey, I'm going to try this again, right?
Yeah.
And it's not there. It's moved on.
Yeah, it's tough to give it all back.
right? Yeah, it's once you have it, it's almost better if you never had it before than to lose it and to have it and then lose it.
Yeah.
And that's why Pip and Run is so good for my personality, because I like grabbing it and spending it or saving it or making it real.
Hmm.
Because when I worked for the firm, they never wanted their customers to make it real. They never wanted them to make a withdrawal. And I thought, I'm happy for, I mean, I'm a former school teacher. It's like, oh, you made 25,000, you want to withdraw your money? Okay, here, click, they'll call up and I would put, and then they would call me in the office, Greg, did you just give that guy $25,000? I go, well, he made the money. Do you let people take food off your kid's plate? They take food off the kid's plate. It's not my money. It's the firm's money, but it's the client's money. It's like, you have to give another trading idea. You have to send them to some resources to keep them trading. Don't let them make it real. So I saw that same scene in Wolf of Wall Street. It says, never let them make it real. Never let them withdraw it.
You
Right?
lived it. You lived it.
I lived it. I was actually told that. Don't let them make it real. Give them another trading idea. Give them a
Look,
newsletter.
didn't the clients after a while get wise to that? Want to
No,
sit
because
by?
because it's greed. You can make more money. You make 25,000. You might make 50,000 next time on this idea. Oh, okay. We didn't care if they won or lost. We just wanted the activity, right? We want people to continue to trade, you know, because that's the lifeblood. If they withdrew the money, then they have less to trade with, less positions they can take control of, right? So you never let them withdraw. You give them another trading idea. You give them a new indicator. You give them something to keep them trading. I mean, that's the old days, right? Now everything's automatic. You press the button, you make a withdrawal. There's no one, But we had the department of people that when people call in to withdraw their money, we have a department of people who would just basically say, well, I know you, Mr. Sir. Yeah, I'll go ahead and process it right now. I'll go ahead and put it in there. But let me tell you about there's intervention in the Japanese yen, and the United States has been buying yen, and so a lot of our traders have been getting, short dollar yen, the long yen trade. And they're making a lot of money in that, and they're making like 10, but we wouldn't say percentages. They're making a lot of money. And I would hate for you to miss that. If you draw all this money, you might want to allocate that toward this. But I'll go ahead and process this anyway. Okay? Is this account still okay? Wire this bank to this bank account? You go, well, wait, no, not yet, right? Oh, well, can you open that position for me? Well, sure, I'll send you over to the trading department, right?
So you had to be part salesman and broker.
Right, yeah, because the more money that's at work, it creates more spreads, creates more commission, creates more activity, right?
Yeah.
So you've got to keep them on the wheel, never let them change it to real. And so when I got out of it, what do? I take the money and I make withdrawals. I, I I'm a withdrawal. I tell you guys, develop withdrawal symptoms.
The right
Just-
thing.
Just yeah, it's like, oh yeah, I just take the money, withdraw, right? I think
I'm thinking of Steve Miller's song, "Take the Money and Run."
yeah, go on, take the money and run. Ooh, yeah. The net saying gold might be moving back up, so Cassius and MACD are starting to cross and point upward on the 5-minute.
Yeah, I turned around, saw that.
Yeah, let's take a look. Thanks for the hot tips. Scalpy on the way up. Let's go. Why are you taking so long to draw? Let me get rid of you. And 5-minute. Okay, how about London? London calling. Look, it's spinning around. It's spiraling. Right. Okay. So this is interesting here because what do we have? We have bearish moving averages, red above green, right? But we tried to break out, we didn't. Our MACD is flat, so there's like no selling momentum, right? The rules say we have to wait for a breakout of 46.12 to take this thing seriously, or it could continue to drop, right? Or this, I mean, because think about it, this did this up here, and I think let's see if we can put the historical on, and it makes this little, hey, I'm going to reverse, like, yeah, right. Show me. Do we have another one? Oh, hey, look, it's coming back up. Whoa. Coming back up. No. Coming back up. No. And then finally it came up, right? So yeah, I need to see moving average above the red and break above the sword. You know, if anything, it might even turn around and drop some more, right? You know, you want to be outside the box, and you want these moving averages flipped around. You want green above red. It's like a Danny Glover. What's the Lethal Weapon movie,
Yeah.
right? With the wire. Which one I clip? The green one? Yeah, red you're dead, blue and you're through, yellow if you're mellow. Click the yellow. Click. Right?
Was that the one where he was on the toilet?
Yeah, you defuse the bomb and the bomb blew up. Yeah, that's the one. Yeah, see, I like this. Just make withdrawals. I just like taking money. Just take the money, yeah.
Take that one.
That's what you want to see. Process. I got a couple of declines. Process. I put the wrong bank account number, right? But it's just withdraw. Take that money out.
You know, I kind of stuck with Aussie New Zealand. It's still working.
Aussie Kiwi. Yeah,
Aussie Kiwi. Yeah.
I'm still in. Oh, look at that. I'm in it too. In it to win it. We're in it to. We're
still
in
working.
it. Yeah. All you need is one, right?
Yeah, I kind of think that's the key, really. But the trouble is finding that horse to ride. You know. I wish we'd get a good little signal like that. But yeah, sticking with one or two, you know, because you can watch them.
And if you look at the risk of like $5 a trade, I know maybe it's $50 if you're trading a 100K lot, but if you can spread this around, maybe you find the best ones, the best of the A's and B's, right?
Mm-hmm.
If they start moving right away, hey, let that sucker run. If it's not, then close it out, you know, and you may be able to close it out for less than your stop loss. You know, you just try like find a handful of fast movers, right? So you look at
just watch those.
Yeah, like here, like look at this guy. He's just hanging there. Look at this long wicks. It's like drop already, right? The pound kiwi. Look at this one, right? That's the one. Now, see, I want the DNA of what makes this. Why does this trade work, right? I want to find more like this one, right? What do we got? We got moving average. We got the green above the red. Yes, stochastics trending up, right? You guys watch the stochastics video?
Yeah.
Steve, could you like post that? I don't think in the net. And when if you watch the father of stochastics.
Yeah, let me
George Lane. And no, I mean his first thing he tells you need to be an Elliotician, right? But here's our pullback there. So maybe we get a pullback. It might not be a samurai sword, but we can do a Fibonacci. Maybe if it comes back to 38% retracement, we can get in this trade for wave. Maybe this is a 3, 4, and maybe a 5. So even though we've missed it from a Samurai Sword perspective, we can maybe look for a pullback to the 38% retracement. Maybe using a pip and run approach to get into this trade and look for a move back to the north side. Right. So that's what you do. Don't get FOMO, because you get FOMO, you go, oh, I want to get long. Oh, you get long right there. And now, right. So you want to wait. Dollar Swiss. Oh, okay, let's go back to our scanner or ORB scanner or AI powered. Kenji doesn't say anything. I think it's Friday. I think Kenji is. Oh, there he is. Hey, Kenji. Okay, here, Chuck. Here's your CAD Swiss. Kenji likes it. Long above ORB. Let's take a look. No chop. Oh, snap, crackle, and pop Rice Krispies. Let's take a look. Oh, yeah, look at that. Breakout. Tight consolidation. Break. Stacking ranges. This range is stacking above this one. I'm gonna put a big one on there, right? Stop loss. What's their stop loss? It's gonna be. I mean, remember it's about $65 on this, so we need another 65, maybe 90. I'll look left and see if there's anything up there. There's no. Oh, there. No. Oh, look. Value. What were we talking about this, Chuck, yesterday? Value. And I was like looking like red above green, drop. And this was an opening range breakout yesterday. Right? And I said this row represents value because why? The moving averages are green above red in an uptrend. I said, well, we've bought that as value, 57.94, and we're at 58.05, right? So that's 7.94. What's going on here? Oh, dollar cat. What's going on there, right? It's kind of moved far away. It's 83, and we're at 79. That's like 6 pips. Yeah. So what's our Euro CAD doing? Our Euro CAD should be. I mean, CAD is like kicking butt right now.
Dollar yen is also on the move top.
Dollar yen is up.
It's coming down again.
Yeah, I'm still in it. I haven't.
Yeah, me too.
Yeah, I said, see the stop, keep it the stop, turn back down, still now in the money, right? No. And these guys are, they're accumulating, buying, or accumulating sell orders. And once they have enough of these orders, they run out, they'll release it. Now they'll release and we'll get a big move down, or they're maybe accumulating for an up move. But the dollar is weaker. We look at the dollar index. The dollar's doing the same thing. It's kind of screwing around there. Dollar is weak, but the euro has been able to capitalize, or has it? 5 minutes. And remove drawings. And where is? It's taking so long to load the indicators. Oh, there they are. Oh, okay. We got a break. 65.71. The top of the range is 65. 55? Oh, 57. Okay. I'm like, oh, that's not 75. I'm looking at my numbers backwards. Like, put your glasses on, Greg. I don't wear glasses. That's 2 pips. That's just 2 pip move, right? Stop loss. Ooh, $550. Nice. So we gotta make 55 and 25, like 80, 800. Let, let's see. Okay. So we got the Aussie Kiwi. Ooh, pulling back a little bit.
Okay, that George Lane video is in the chat for anybody who wants to check it out.
Yeah, George Lane, he's the father of stochastics.
Yeah, it's called Stochastics for the Serious Trader.
Okay, yeah. Our Aussie Kiwi profits are pulling back. Euro Swiss. Let's go back to gold. Let's go back and check that out. See if it climbed back inside the box. This is one of those counter trend trades where you can make money on the counter trend. I'd rather see it. Cause look, he gave a sell signal right here. Oh, because these guys, we're not the only ones using the system. So they have a stop right here at 46.12. When price hits 46.12 and keeps going, it's going to stop these guys out. And that's going to, those bear stops are really buy orders, right? You can close out your sell with a buy. And so that will push price up as the bears are closing out their positions, getting stopped out. It actually pushes prices higher. And that's the really cool thing about waiting for it to break that is that it's going to force people to liquidate. Okay. And dollar yen. All right, there we go. The dollar yen show looks good. It needs to break this line because this line held. Bears were the battle of the bulls versus bears. Bears tried to push it down to 59.28. They were repelled. They assaulted again. 59.28. They were repelled again. And we're having a third assault. Third time's a charm. Let's ask my wife. Third time's a charm, right? All right. We can see this break south. Yeah, watch that video. I know it's very poor quality. And I know the net now we're talking about 720 and 1080. This is like 5. Okay, 5p. It's not 500, 5, because it's like a VHS recording of something from 1996. I think that's like the only video of him that's still around. And it looks like the Bears are getting kicked in the teeth by the Bulls. But how long can this continue? The Bulls are being pushed against the wall. And in the red trunks, weighing over 2,000 pounds, the Bears from Chicago. You like the Chicago Bears, right? We're going to move to Indiana because the Indiana Bears. And then the blue trunks, weighing 1,500 pounds from the stockyards of Fort Worth, the Bulls. Just when we thought we were getting some momentum for the Bears, I mean, the MACD also tells you like this is not going to be a very good party, right? When the MACD has angle and separation, the lines are far apart, right? You get nice. We're in this consolidation. Aussie dollar stuck in a range. Silver. Oh, silver looked like it was on. Silver is doing a gold thing. It dropped. Maybe it's coming back up. Maybe it's faking out to drop some more. Kiwi dollar. Or retest of the value area. Maybe a reversal and a drop. That might be interesting there, right? Because we had a failed move back into the samurai sword with a small bodied. This is a you don't have very many candlestick patterns in with using Hakinashi candles, but we have that small body candle and a large body candle, that green. That's usually a bearish formation. So we have this rejection against the moving average, a rejection against the sword. So maybe we turn here and really gives us that entry. It gets back to the ideal entry that we should have got or could have, or we would have gotten if we waited. So this is like a return to the scene. Oh, started the crowd. I hear an alarm. And pound. Oh, okay. Okay, well, yeah, price dropped, but it rallied back up again. All right. Oh, we're short already, right? Hey, where, oh, what's this? Okay, you're confused, Greg. Hey, we're making money. Yeah, oh, this is EuroCAD. Oh, okay. I'm like, oh, you know why? I took off I didn't, the symbols are not connected. There we go. Yeah, I'm like going, what's going on here? Who's got the EuroCAD? Can I hear a woot woot?
Yeah, I'm in it.
Nice.
It's making a little retracement right now.
I did like my music. Sorry about that, guys. My God, Craig, you're drawing attention to me. I like being shined under the radar.
You scared me.
I'm scared. I'll just get scared of this. Okay, you look at the pullback. See, a lot of people go, oh, take it as short, And see, you have the Harami, there's a Harami pattern, but it's an uptrend. So the Harami of the small body candle inside the large body candle, like we have here, was bearish, but we have the trend is up. So these just represent pullbacks. We can buy or add more bacon to the grill if we wanted to. We can use those areas to add more, but we shouldn't become a panicking and sell because everything else is pointing up. MACD is above the zero line. MACD is above. Stochastics is curling up. Kind of. We have our moving averages. We have our green above our red. So no need to panic. Euro Swiss, on the other hand, is another example here, right? We'll be out here. Get rid of that. Uptrend, pullback. Is this value, right? Let's go to 15-second chart. 3, 4, 5, A or 1, B or 2. Now, what if I smack this baby with a 100K lot, right? There we go. And then move my stop loss gonna keep my stop loss the same. Let's see if we can actually maybe move my take profit down, since I've probably gonna make a lot more in about 2 more pips. If you find that long wick, that really long outsized wick piercing through moving averages, that's a really good entry, even though the candle is red. It's catching a falling knife, but see how fast we move back into profit, right? Because this is a reaction. This is where traders got too emotional. The bears are high pawing each other. See what kind of cave they're gonna buy, or how much, how many nuts and berries they're gonna be able to get. And then all of a sudden, boom, the bulls come in. And so they're shocked. And then the shock creates this little space where you see price moving in our favor really fast, right? And then since all these guys are the wrong side of the trade, they're all scrambling, getting long, and that pushes prices up even faster. So catching these reversal reaction points, well, that didn't sound good. Euro dollar. Oh, my euro dollar got smoked. Okay. Whoa. So much for the breakout. Fake out to the breakout. Well, see, look at the moving average, red over green. I should have known better, right? I'm gonna code an indicator that says, Greg, do not go long. This is a value trap on the other side, right? Oh wow, it's going up against the moving average. We'll sell it, fade the rally, right? I mean, like that one. Every time it broke above was like a sell opportunity, right? But but we're trained to go, oh, if it's breaking up, we should go up, right? And and then we don't have a higher time frame here. There was a 30. 30 is. This is not really decisive either, but still, if you were to eliminate all the other garbage here, that's a great sell. Yeah, it was a great point, but it didn't really lead to more pips. Not really. But the mechanics are there. Stochastics overbought in a downtrend is what you want. That's a tremendous sell signal. Because everybody sees this and they're buying. You're not the only lemming jumping off the cliff, right? And then you go, nope. There was that movie called, was it Ants or Insects or something? It was a movie about, and there was these 2 moths, and one moth is like, oh, go toward the light. He's like, no, don't go toward the light. It'll kill you. Light. And it was a bug zapper. And they show a little animated cartoon moth like hypnotized walking toward the light. I mean, you see his sizzle and he just disappears. EA, Electronic Arts. They make Madden 2026, right? No, Euro Aussie. I know he's talking about. I always see people put EA. I'm like, oh, what's EA, bro? Oh, well, I did not need to be in that. Wait. Yeah. EA long. No way. EA short is, look, red above the green, MACD turning down. Yeah, that is a great trade. Chuck, thank you for sharing that. Stop loss above the high. Let's go. $91. say 130. 130, right? Yeah, let's do it. Let's get paid. Let's go. How about Cat Swiss? Is that good? I don't know if it's done anything. Euro Swiss. 223. Okay. Euro Cat.
Dollar Swiss took a dip into the ORV, but it broke out. It's going north.
Yeah. Our Euro Cat is good. I'll go check Dollar Swiss. We go back to the majors. It's easier for me to find. And it's trying to draw. There it is. Well, look at that. Dollar Swiss. We're going to do a standard lot there. Stop loss at the 69. If you're using 10K lots, $6.90. Like 90, 95 or something. Like basically like 1.5 times risk. So 35, 105, maybe 1. There we go. Yeah, that's close enough. Horseshoes and hand grenades, that's close, right? Stop loss. Take profit. And I can adjust it. 1.39. Okay, that's 1.5, 1.5. Let's go. Kiwi dollar turnaround. How about our Kiwi or dollar yen? Yeah, not. See, this is slow money here, right? It's like this has been bopping around here, not really doing anything. You know, I might just take my 44 cents and get out, right? And just find a faster horse. Maybe all the yen pairs are. I mean, this has already did its move. Nothing's really breaking out. Yen pairs are. Yeah, because the yen index is not going anywhere. This is the index. Just like the dollar index, there's a yen index, and it's not doing anything. So we can maybe stay away from those. And the dollar pairs don't seem to be doing a whole lot either, right? So if it's not the dollar, if it's not the yen, the only thing left are cross rates and metals. And we're still not very. The signals are crisscrossing, right? Got bearish and a little bullish trend up with the moving averages moving down. This is where I lose money. If I lose money, it's always like trying to pick the bottom with a reversal. Like if you see divergence in an uptrend, that's easy, right? Because it goes up, pulls back, ABC, and then you get divergence, and then it's an uptrend. But after a deep downtrend and it's just walking, you can just lose all your money trying to. And we used to use pivot points back in the day, and pivot points are kind of weird. They were kind of cool because the market didn't really move that much back in 2006. Let's see, pivot. And so price stayed in about a 75 pip range. And so you got this P is a central pivot, and it's here, right? S1. When price gets to S1, I mean, it was like free money. Hit S1, then it goes to P. If it goes to R, R is like one standard deviation above the central. This is the average price of the previous day, right? And we would trade the euro, and I mean it's kind of magical back then. If you think about it, right? We get to S1, you buy S1. It used to be always divergence to S1. and then they go from S1 to P, and if it broke above P, then it would go to R1. And you figured out P by taking the open, high, low, and close of the previous day divided by 3. That gives you this. This is the typical or average price for the day for the euro. One spot 16660. And if you move from S1 to R1, 43 to 78, what is that? That's 32, 35 pips. Right. So 35 pip range. Now, if it ever dropped to S2 or got as high as R2, right, then we would sell this immediately because you're two standard deviations above the mean, and usually have a mean reversion where price will revert to the mean. Now, when volatility exploded, like in 2015, going to Brexit and all that, well, then the stuff starts moving 100 and 200 pips a day. You buy S1, it drops to S2. You buy S2, and guess what? There was an S3. Never knew there was an S3. Oh, buy S3. Oh, and then there was an S4. Oh, buy an S4. And it drops to S5 and S19. And, it just got crazy. And so you don't see people talking about pivots anymore. But unless when the volatility drops and everything becomes rangy, these are like magic. But then, prices start streaming up, pound yen going up, R3, R4, R5, R19, right? So, really haven't seen historically. Let's see we got above, I got close to R1. We dropped below S1, like that. But yeah, that was in fact, the old Pip and Run videos used to incorporate pivots back in the day. Object tree. Let me get rid of these. Can't get rid of them. Where are they? MACD. Oh, pivots. Goodbye. Back into the rubbish heap of history. You go. Okay. Are we breaking south? Let's do this thing. Sell euro. Stop loss. Or I'm already short, right? Yeah. All right. Euro. Wow. Euro Swiss. Don't do this to me. Aussie Kiwi. CAD Swiss, nothing. Euro CAD. Euro CAD is the best performing one right now. And we finally got our crossover. Notice where we got our crossover, how far Euro CAD has already dropped, right? So if you're waiting for the crossover as a signal, that's the problem with moving average crossovers, that they'll be really, really late to the party, right? But see, now we can move our stop into we can lock in $25 in profit right there. So, this is a risk-free trade. This is the kind of trade that you want lots of those. God, thank you, Father God, for giving us lots of trades like Euro CAD in the future, right? Moving forward. So Chuck, is it your Aussie? I'm in it too. I'm in it with you, but I'm late to the party as well, and I'm not making any money there yet. Kiwi dollar. Oh, $60. Oh, well, that's 6 cents on a pip. We'll take it. Right? We'll take. I think I was up a lot more, but got my eye off the ball there. Our Aussie Kiwi, 95 cents. And Aussie Swiss. Let's go back to our scanner. And Kenji is checked out. Oh, Kiwi dollar short below ORL. He still likes that. CAD Swiss, it's flat. Counter trend. Are you long or short this one? Okay, you still like that one. Okay. Well, I guess I like that one too, right? I can go back. I go back in it. Try it again. So we get some more out of it. I mean, we're within the range is 45 and we're at 43. We're only 2 pips away from the sword. So I'm gonna hit that baby again. And 73, half 73, 35, 108, 1,080. Let's go with that. What's that? No. We're going short. We're going short. That's 3. I don't need that. That'd be nice. So we'll probably get like 1.5. All right. Well, really? No, it shouldn't be like that. Oh, where's my entry? Oh, my entry is here. That's come on, Greg. What's the entry? Yeah, why is it 180? Let's see if we get some drops. Oh, euro yen. Look at that. That one stuck by. Pound yen. Now the yen pairs all want to drop, right? Dollar yen still messing around. Man. Pound yen is on its way. ORB is 49 and we're at 40. So that's like, it's like 9. What was the range? 57 to 49. What's that, 8? Well, it's within range. Stop loss is going to be 11. And 11, 16. Like that. So my entry is here. Stop loss is here. Take profit is here. Okay, so I can go a little bit more. Okay. So we got short 216.40, take profit at 216.11, stop loss 216.57. Let's see if it continues. So you probably say, well, how far can we get in after something breaks out? And I would look at what the current range is. I would take the range of the box, of the samurai sword, the height, the width of the sword, right? I say, okay, 49 to 57. That's what's with the 8 pips. 8 pips. So I wouldn't go farther than 8 pips, right? So we're within range of that. Especially on a volatile pair like pound yen, that's just nothing. The average true range of pound yen is probably about somewhere like 180 or 190, maybe 200. We can check that. Go to daily, go to the ATR indicator, average true range. And it's okay. 144. 144. So 9 pips is not going to make a lot of difference in pound yen at 144 pips. But it's been as high as 207, right? So the volatility has dropped quite a bit. But usually it's like in the 180s. Yeah, 200, but it's fallen. $1, 13 cents, 6 cents. Oh, it's a zero. Okay. Let me get back to our time frame. 5 minute. Let me leave this at the 30-minute. 30 minutes, very powerful downtrend. MACD crossing over, stochastics crossing over. This should be a winner. I mean, that's what we'd like to say about all of them. But let's say the odds are in the favor of this. I think even something went fire. Oh, EuroCAD hit the target. I'm execution marks. Okay, there we go. Yeah, attacked it. Let's get an applause. Any guys still in EuroCAD? No EuroCadders?
No, I think I was in, but I got out.
Okay.
Before.
Yeah, my take profit was hit. Oh man, bunch of stuff went sneezing. Well, Euro Swiss was stopped out. I don't even know where we were. Oh, we were long. Long and wrong. Okay. Aussie Kiwi. It looks like it's topping. I'm going to take my 95 cents and get out of here. Dollar Swiss. Going the wrong way too. CAD Swiss. It's really it's Thursday. Well, we had a wick down on the euro. Pound yen. Okay. Euro Aussie. Nothing on Kiwi dollar there yet. Let's go to gold. And what do we see here? Fake rally. Where is the? It's taking its time drawing. Okay. Well, that was that rally into value, and it dropped. Right. All right. Cool.
Something.
You get the dollar yen on the short.
Yeah.
Sweet. Yeah, cool. I mean, it's really hanging around there. Really, so, so your entry, you must have got in pretty good up against the. Oh yeah, it looks like it wants to break now. Look at that. But this is a range. It's a really interesting range where people probably could, would buy the bottom, sell the top. It's in that range. But once it breaks that range, it's going to be a pretty good move. Like, congrats, my friend. What's Aussie doing? No, nada. They're stuck in the box. They don't want to. Oh, you know what? Let's see what a big news. We didn't check the news, and so let me go ahead and check the. I'm going to check Forex Factor for the news. Looking for where is our economic calendar? Is that it? Well, there it is. Nothing. There's nothing going on. How about
Yeah, about 30 minutes ago, there was this loud explosion in Kiev, but I would be surprised that has an impact on anything. Um,
maybe on the euro, maybe,
yeah,
but no, but like there's no like red tier, red level economic data. Let's see if anything happened. No, it's like I think the market's kind of immune to. I think it's immune to Iran and immune to Ukraine. U.S. dollar index means that is like dead money right there. It's like right. If you never traded and nothing's ever happened, chances are it's probably because the US dollar hasn't gone anywhere. And since all these are traded against the dollar, well, that's why you something else something went somewhere. Dollar Swiss got stopped out. Okay. Or drop. We're trying to continue the uptrend and it dropped and we're out. And so everything is in the range. So if we try the yen pairs and they are, here's the dollar yen, I mean pound yen. Pound yen is making a few pips. We were looking for $17 out of that. Now, if you dropped a standard lot in there, it's $27. And if you trade 10 standard lots, then you're looking at $230. So you look at the dollar. If the dollar isn't moving anywhere, look at the yen. And if the yen is moving, then you can start finding some trades in that, like this one, right? If the yen is sad, then look for cross rates. And the cross rates are, I mean, there are some majors in here too, but like Aussie CAD. Usually the cross rates are doing better. And it's a little bit better. Aussie, Swiss, no. Because sometimes it's Swiss is messed up too. Because they have zero interest rates and it doesn't, people want to buy a currency where they can make some money. Either interest rates, the differential between like the yen has very low interest rate. I think it's like 0.7%. So people buy stuff, they borrow in yen and they buy other stuff. That makes the yen even weaker. But they don't want to raise interest rates because if it does, it creates more inflation, makes everything more expensive. So they've been avoiding that for almost 60 years, right? The 30 years of 90s, 30 years. The last decade, now beginning the lost decade, lost 2 decades. When they had ZIRP, zero interest rate policy, ZIRP. And then they had negative interest rate policy, NIRP, negative interest rate policy. They haven't done PERP, positive interest rate policy. Well, I guess 0.7. It's close to 0. So yen pairs, pound Kiwi. Pound Kiwi has come back to the entry point. Okay. So this happens where price rallies, maybe a big wave, loop wave 3, a pullback, and we are in a value zone with the smaller moving average above the larger moving average. Well, then, and stochastics is an oversold position. Well, this might be worth a shot, a second chance at, I got a green candle there, stop loss below low. Well, that's a big. I mean, I'm trading 10 standard lots here, right? And just to spice things up with about 7 minutes left in our trading session. And we'll see if we get a dead cat bounce here at 2.2849 with our stochastics hook, our moving averages, our pullback to a Fibonacci. We pull back to let me make sure I get the right swing. This seems to be the only swing that we have for a pullback to the 50 back. And then sometimes what I'll do is I'll take a Fibonacci from the top to the bottom and look for a take profit that would take me to the 50% retracement. Just take 50%. If this thing can give me back 50% of what it lost, I'll make $309. Now, if this is a true slingshot, it could go back to the old high and get back to 2.2872. But bulls get fed, bears get fed, pigs get slaughtered. So just try get back to half. And you tell by the size of my position, I'm a little bit more confident that we could get a bounce, right? Are we getting a bounce? I don't know. Let's see. Well, it's like a bounce to me. I see a green candle. Another green candle. My entry is here. Not there yet. Too late to celebrate. Well, let's go.
Bye.
Let's go. Yeah, give it an electric shock. Sitting here at the 50 moving average here. Like kicking back, having a beer. Like, no, let's go. I don't have all day. Let's go. Dance. Okay. So we have clustered, there's a lot of other things going on here. We've got a cluster of wicks, long wick candles. Usually long wick bearish candles are bullish because this was a full body bearish push lower, right? And then buyers stepped in and pushed price back, leaving a wick, right? So this was the opening price, the closing price, the low, and the high. So we're there. They tried to do it again, and it pushed down. And it got pushed back up again, right? So now it tried twice and failed. Then they were thinking about it and failed with a southern doji. Southern doji is red. Northern doji is green. I guess it has an accent, a southern doji. So, I mean, the next, so it's indecision. It represents indecision. Do I want to go lower or want to go higher? I'm not sure. What do you think? Well, I'm not really sure. Maybe we should go lower. And I think we should go higher. No, you get the northern doji, right? Park the car, get a cup of coffee, walk the dog. And then the decision candle goes, boom, let's get out of here. Let's go. Let's go. Let's go. We have our 5 o'clock candle coming in 2 minutes. Got the British guys gonna get lunch at 7 Eastern time. It'll be noon their time. So they might run it up before lunch. Might even move my stop up. I don't want to lose $900. Let's move it up. 300. Maybe like a 1-to-1. There we go. No. A little bit more excited. What's 15-minute chart, 15-second chart, or more scary. And look at that double bottom divergence. 1, 2, 3, 4. Oof. Maybe I want my stop a little bit lower. Right back here. Stay back behind the low. Wait till it gets into the money before you move it that close. Okay, so there our really small ABC correction off of this weird flat 5-wave pattern, right? 1, 2, 3, 4, 5 ABC. Now we're gonna start another run, another stochastics cross. Green above red moving averages. Let's go. 5 o'clock. There you go. There you go. Come on, baby. We're at the hour mark, or the 2 hour mark for us, but usually at the hour, you see significant moves in the market. So let's check our other trades and come back to this one. This was pound Kiwi, cat Swiss. Yeah, start turning up, but not enough to put us in the green. Euro dollar. Oh my goodness, look at that. The euro. Go with your bad self. We'll take that. Pound yen, $2.70. We're going to let that run. Okay. Euro Aussie. No, nothing for me yet. Boo. Okay. Kiwi dollar, $60. I'll take $50. I'll close it out. And I'm gonna let these others. I'm gonna let them run. 72 cents. Oh, it was anything else. Gold. Did it go? Did it turn? Did it turn? Came back in the box, broke the box, came back inside of the box. Nothing there on the 5-minute chart, right? Still hanging around, twisting. Look at that. This puts foot outside. That's too cold outside. No, it's too hot. Nah, I'm just gonna stay inside. All right, Bitcoin. What did Bitcoin do? Okay. That was a trade. That's the one. Who was looking at this one? I know Nanette is the queen of Bitcoin on the weekends too. But look at that. That was a clean move right there, right? That's $1,000 move from 78,800 to 79,800. What's the risk reward on that one? Samurai sword. Bow, bow, bow. Entry. Take profit. And our stop loss. You risk a 6.46 to 1 risk to reward ratio. Pretty spectacular. Oh, Winans BTC expert. Oh, Winan. We'll look for you next time for the BTC. We got some. Do we have any people out there in the YouTube watching us? Give us a thumbs up and a like. Okay. Yeah, if you want to watch this later on in all of its glory, well, here is a link there. You can watch it, right? And also, let me also tell you guys about the. I don't know if you've seen it. You have a referral link. You can earn 40% by referring people to the September challenge. You find it. You go to your profile picture, and you go to affiliates, and then you can earn commission for life when you invite someone to create or join a school community. We want them to join our community. Click the 50 to 50K challenge. Yeah, highlight that and copy this link and share it with a friend, and you get 40% ongoing. So that's a pretty cool deal, because we do have if you want to do the annual $16.97. If someone does a year with us, well, that's like $600. They'll be automatically deposited in your bank account. Or if they do month to month at $199, then that's I believe the system will give you $80 for each person. So that's what you can do there with the school affiliate program. And I look forward to seeing you for our September challenge. Okay. I'll talk to you later, guys. Thank you so much. And Keep training.
Have a great weekend, everybody. You too,
Bye.
Dave.
Right. If you have any questions, you can book a private. Hold on, let me give you my link for if you want to make a private call with me. You get private coaching during this time. And so let me make sure if you have any questions, you need help setting up something, not discovery call. Where is onboarding? Onboarding. What's the private session? View all. View all. Oh, there it is. ETU. ETU, right? Like that. Copy link. But bookmark this link, and so you can book a call